Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with a scenario that continues the range, as over here we're looking at an expanding a flat, the most common flat pattern, with a 3-wave move down in a wave A, a 3-wave move to the upside in a wave B, after which we look for an impulsive structure to the downside in a wave C. The most common target for a wave B in an expanding flat is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of wave A, giving you a target area between 76.9k and 78.8k. After wave B, we're looking for a strong impulsive structure to the downside, as a wave C usually is very quick, and the target area for your wave C is between the two 1.618s, giving you a target area between 56.7k and 50.2k. We do have some additional support in this area. First of all, we have a small little target box here, and even though it looks small, it is important because we also have some structural support here between 51.6k and 52k. Maybe more important, we also have a weekly gap here. On the weekly time frame, we have a quick move to the upside, and that created a gap. You can see over here candle number 1, which is an order block, and this order block is also in confluence with the target area for your wave C. Then a quick candle to the upside, and here is another wick. This creates the gap. Usually the first time the gap is hit, you do expect some sort of support, which in the impulsive structure to the downside is what I have labeled as a wave 3, then looking for a 4 and eventually losing this support, filling the gap to the downside, hitting the low of this gap at about 53k. The target box is just below, as you can see, and then we're looking for support as price then continues the trend towards the upside. Now, what is very attractive in this scenario is what it does to the trading psychology in the market. Taking the high here will undoubtedly create some more FOMO and especially more greed. However, if price then falls towards the downside, we stop some people out, and we could also create some panic and fear if we lose the low over here of wave A, especially if that happens with a quick wave C to the downside, which is common in a flat. However, after the panic and fear, we then bring price back towards the upside. If we go to the 1 hour time frame, the most bullish scenario is an impulse towards the upside, where we do not expect rejection in the wave B target area for a flat, but we are looking for continuation to the upside. Here we have our first 1, 2, 3, 4, 5 wave in the blue, wave 1, an expanding diagonal, followed by a corrective structure in a WXY, hitting the common target area for a wave 2, the golden pocket 786 area, and also the common target area for a wave Y. The common target area for a wave Y is taken from the high to the low of W to the high of wave X with the trend-based fib extension tool, and the normal fibs over here are taken from the low to the high of wave 1. In this scenario, we are then looking for a wave 1, eventually a 2, and then we want to see continuation to the upside, and we don't want to see strong weakness in the wave B target area. So we really have to observe what price does in that particular area. Now, the alternative of already seeing continuation and looking at a 1, 2, 3 is a longer sideways correction in this wave 2. Here we still have the same wave 1, 1, 2, 3, 4, 5, but now we are looking for a bigger 3-wave corrective structure in this wave 2. You also see the vertical lines on the chart. That is a fib time taken from the low to the high of wave 1, comparing wave 1 with wave 2 in time. Most commonly, a wave 2 is finishing after the 0.382 fib time, but you can see that these lows here are made before the 0.382 fib time, which does lower the probabilities a little bit for already seeing continuation, but we observe what price is doing in the target area here for a wave B. Currently, we are ranging around the golden pocket, always important resistance, but we do have a little bit of resistance above price. The blue box here, 71.6k to 72k. It's interesting that we hit the golden pocket here and currently are ranging at the golden pocket. If we do reject at the golden pocket, then a potential Gartley is on the cards, where you have golden pocket, 786 continuation in this wave 2. If we then finally look at the triangle scenario, we simply continue the range. Here we have our wave A, B, C, D, E, and then we expect continuation to the upside. In a triangle, 4 out of the 5 waves have to be a simple zigzag structure, either a 535 zigzag down or a 535 zigzag up. If one of the waves is not a zigzag but a double or triple zigzag, it is by far most common wave C or wave D, not wave B, and therefore this structure here is labeled as an ABC. However, if we label it as a ABC, you can see that this wave C is quite short. A trend-based fib extension from the low to the high of A to the low of B will show you that this wave C only hit the 0.618 target. The most common target is the 1 to the 1.236, which is up here, and the 0.618 is actually a rare target for a wave C, which lowers the probabilities for this particular scenario. We then expect a 535 to the downside in a wave C or a double zigzag, same in D, and eventually close it out with E, after which we expect continuation to the upside. The 886 here has been hit, which is very important, taken from the high to the low. If we are looking for a much bigger impulse to the downside and much lower prices to come, you're looking for an impulse wave 1, eventually a 2 and a 3, but the 886 is a very rare target for a wave 2, common for a wave B or a wave X, increasing probabilities that after this 886 any move to the downside is a corrective structure in a C or Y, which in turn increases probabilities to sooner or later take the all-time high. We also already have continuously bullish CVD divergences in this range. We had bullish CVDs here. We even actually have bullish CVDs all the way here. Higher low in price, lower low on the CVD, increasing the probabilities to continue price towards the upside and take this high. Now more locally over here we have a higher low in price, lower low on the CVD. That is a bullish CVD divergence. And very locally we have bearish and bullish CVD divergences. So it's a little bit of a mix. Good to wait patiently and see what happens more locally in this range over here. So if we then look at the probabilities of the different scenarios, then currently on the number 1 spot we have a flat / the bullish scenarios, where basically you take the 74k high before potentially at a later stage the 64k low. In a flat scenario, you first want to see price moving to the upside before taking these lows at a later stage. And in the bullish scenarios, you expect continuation where you don't want to see this low being broken. On the number 2 spot, we have the triangle, but even in the triangle here, we then expect 74k to be taken before the 60k low, as we expect a continuation of the range here in a wave C, D, E, and taking this low would be an invalidation of a triangle. If price takes the high, we have to observe the reaction at the wave B target area to see if we do get continuation or a rejection to the downside. So this area is very, very important, and we have to wait and see what price does there. Bullish divergences in this range do support a move to the all-time high before potentially moving to lower prices, and from a trading psychology point of view, I would love to see a solid dump before actually continuation to the upside to stop people out, create a bit of panic, a bit of fear as well, but also first taking out the all-time high would be the cherry on the top, as it installs a FOMO and greed before then a flat wave C, which therefore makes this a very attractive scenario. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.